Welcome to Drill Down Earnings. We have the latest quarterly results from Arm Holdings. Q2 results. This is the business story behind one stock on a move. And yeah, the stock's moving. It's moving down. The stock that has gone so much up. Why? Well, let's look into it. I'm the Futurum Group. I said market strategist Cory Johnson. Arm PLC, Arm Holdings, whatever. Second quarter earnings beat Wall Street estimates, but the business behind those numbers, not just the miss or the beat, is a lot more interesting than that. Let's go some top line numbers here. Total revenues of the quarter, $939 million, pretty evenly split between licenses and royalties, and a very profitable quarter, $182 million in operating profits, $223 million in actual profits. That's good. And revenue growth is surging, 39%, a little bit below last quarter, but 39% in a year-over-year basis for such a big company. It's fantastic. But let's look a little deeper at the business beyond the headline numbers. So this was once upon a time a mobile computing story, and that was basically it. When you looked at what their business was, there was mobile and some other stuff. And now it's really diversified. They're in mobile, they're in cloud compute, they're in AI cloud compute in particular, they're in automotive, IoT, and embedded systems. They're in many other businesses, and has allowed them to grow as those businesses grow. Also, as they move on to the next version, ARM version 9 is really what's driving their royalty growth. When they talk about their royalty revenue by architecture, this new ARM v9 is taking off, and they say in the next quarter it's going to be even bigger. And yet, the thing that disappointed Wall Street, why did the stock go down? And I'll show you how much it went down. It's really notable. The guidance wasn't great. I mean, midpoint of the guidance of about $805 million for next quarter, but maybe that's not what everyone was hoping they would get from a company that's been growing by leaps and bounds. Just bounds isn't enough. I don't know. Stock sold off 13% in after-hours trading without any particularly bad news on the conference call. Then again, it's up 92% in the last year, so maybe it's a little profit taking there. You can see the stock has been selling off for weeks. One of the things that got people so excited about this stock was their association with Nvidia, and in particular, the use of ARM designs to be accelerators to Nvidia chips. So on the conference call, Arm PLC CEO Rene Haas, that great mind from Rochester, New York, where else? Great minds come from Rochester, New York. Other minds, not so great, also come from Rochester, New York. But Rene Haas talked about their partnership with Nvidia and how it's expanded over time as Nvidia's chips have expanded to more and more complexity and what it means for ARM's usage in the data center.
So when you think about the AI data center, and particularly around the accelerator and the CPU that ties into it, clearly the lion's share of the market today with accelerators belongs to Nvidia. And Nvidia, their numbers speak for themselves, but relative to the penetration of ARM in the data center, they had announced Grace Hopper about a year and a half ago, which was the ARM-based design, which integrates an ARM-based CPU to a Hopper GPU. The next advanced platform that they announced, Grace Blackwell, which is going to be shipping soon. They've just now started initial volumes of that. We expect with that design to have the volumes be higher than it was on Grace Hopper. We think that Grace Blackwell, just given the performance and power, will be a very, very good chip for us in the AI data center, partnering with Nvidia.
And yeah, it's hard to imagine these guys that were doing complex, but not the most complex chips for mobile phone devices, now designing accelerators in the most complex computing environments ever created in data centers for AI with Nvidia. All right, what's it all mean? What's your big drill on earnings takeaway on one number that means a whole lot? I've got that right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Arm PLC results, second quarter results. Here's what you need to remember about these numbers. They were good, fantastic revenue growth for this company, $939 million in the quarter, 39% year-over-year growth. The guidance wasn't great, so the stock sold off a bit, but things are really strong for this business. The stock's nearly doubled in a year, so maybe it was due for a little bit of a sell-off. The thing I want you to remember, though, the number is 6. Why 6? Because 10 years ago, 8 years ago, this was a 2-business. Now they're in IoT and embedded, in automotive, in cloud computing, in consumer electronics, in other mobile stuff, and in smartphones. 6 different types of businesses for ARM. That expansion has led to the growth of this company. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. And of course, you can check me out on X at CoryTV, on Instagram and TikTok at Drill Down Pod, and at the 6.5 Media YouTube page. You're going to find all of our earnings reports and a whole lot more. Leave some comments, subscribe, follow us, tell us what you think. Drill Down Earnings, part of 6.5 Media.